Hey everybody, it's Dave here from the Market Board. Today I'm going to talk to you about the third place. A third place is a space outside the home and the workplace or school where people gather and communities are built. Today video games are becoming the new third place, with Fortnite probably being the best example of the shift towards social gaming. That is according to Kathy Wood, CEO of ARK Invest at least, and I gotta say, I don't really disagree with her, so today we're going to take a look at Corsair Gaming, stock ticker CRSR. So let me set the scene. The global gaming PC and streaming gear markets, including peripherals, components, and pre-built PCs and laptops specifically designed for PC gaming, totaled approximately $36 billion in 2019. As gaming, esports, and streaming continue to expand into the mainstream, casual gamers increasingly aspire to emulate committed gamers such as esports athletes, and amateur streamers are now increasingly seeking to improve their production quality value. Corsair expects this will bring new customers into the gaming and streaming gear market and push existing customers to improve their performance and content quality in part through related gear spending. So who is Corsair Gaming and what do they do? Corsair Gaming is a leading global provider and innovator of high-performance gear for gamers and content creators alike, including streaming peripherals, components, and systems to enthusiasts globally. And currently, they claim that they maintain a #1 US market share position. Before we break down this product catalog though, let's first turn to the people who make the business what it is, their senior management team. Starting with Andy Paul, their CEO. He co-founded Corsair in 1994 with 3 other engineers from Silicon Valley. Previously, he served as the president of Multichip Technology, which operated as a subsidiary of Cypress. Before starting Multichip, he also held various sales, marketing, and engineer positions at various semiconductor companies, including Fairchild. Mr. Paul also currently owns and operates Indian Leap Vineyards, which is the maker of award-winning Sonoma wines. Next up, you got Michael Potter, the current CFO of Corsair, but before he joined them, he spent 5 years as CFO of Canadian Solar, a large NASDAQ-listed company whose HQ is in China, actually. Thirdly, we have Thi La, who has served as Corsair's Chief Operating Officer since August of 2013 and President since this January of 2021. Prior to her role of President and COO, she served as the Senior Vice President and General Manager of Corsair's Gaming PC Component Unit. And last but not least, you have Julian Lighton, who has led strategy at 3 public technology companies, and earlier in his career, he spent over 10 years as a senior executive at Cisco Inc. and has also held executive positions at Hitachi. And finally, he holds a diploma in negotiation from the Kennedy School of Government from Harvard University. They will need every bit of that experience as they face tough competition in the ways of Logitech, Razer, Cooler Master, and even EVGA. Currently, the stock share price is trading just over $34 a piece, with the market capitalization of about $3.21 billion according to FinViz. Now, before proceeding, I would like just to take this quick opportunity to thank you for watching this video and to remind you, as always, to disagree with me down in the comments below. Now, before we break down the offerings in the actual catalog, we first should establish why are people even buying Corsair products? Well, it's because video games become more graphically intense every year, requiring high-end gaming PCs to play competitively. And competitive PC gamers are going to want both high-quality graphics and high frame rates. And for that, they turn to Corsair. Starting with gaming and creator peripherals, Corsair has numerous options for keyboards, including wireless, mechanical, standard, and the iQ Nexus. In the way of mice, they offer specialized products for first-person shooters, massive online battle arenas known as MOBAs, as well as for MMORPGs. For headsets, they have wireless, USB, stereo 3.5mm, and audio accessory options. For streaming peripherals, they offer capture cards, stream decks, audio lighting, and even the green screen. And for performance controllers, they operate underneath the name Scuf Gaming, which makes customized controllers starting at $199 for PlayStation, Xbox, and the PC. Moving on to their gaming components and systems, starting with memory, Corsair offers extreme overclocking performance as well as laptop and notebook options. For cases, they have the iQ RBG, the Super Tower and full-size tower, mid-tower, and small form factor. In the way of power supply units, Corsair offers the IQ Smart, the premium efficiency, modular quiet, or even the reliable continuous model. And finally, in the way of cooling solutions, they offer the Hydro X series, an extreme cooling system that you should really Google on your own because I cannot draw it out for you. They additionally offer an RBG fan, the low noise fan, and a magnetic levitation fan. And the additional brands you may see them selling products underneath the name include Corsair, Elgato, Origin, Scuff Gaming, Visuals by Impulse, and Gamer Sensei. Corsair's core business is creating high-performance gear for gamers. I'm curious as an investor, though, as to how well they can turn that into a profit. Starting with revenues, in 2018, Corsair reported $937 million in revenue, growing 17% in 2019 to about $1.1 billion, and then in 2020 it grew an additional 55% to $1.7 billion. In the same time period, we just compare their cost of revenues. Starting with 2018, we see that Corsair reported $744 million in cost before growing 17%, the same amount as their revenues, to $872 million in 2019 before it grew in 2020 41%, less than the 55% in revenue growth, to $1.2 billion in costs. The end result saw Corsair reporting a gross profit in 2018 of about $190 million, growing to about $225 million in 2019 before it doubled in 2020 to $465 million in gross profit. Now, there is something I think that is worth mentioning, and that's when I do this research, I like to actually take a look at the SG&A as well as the R&D costs found in the income statement and compare it to a top competitor. There's really no magic number that I look for. I'm just looking to compare the consistency and profitability of the two companies. So I took Logitech, and we see in 2018 their SG&A cost about 58% of their gross profit, with their R&D costs representing 15.8%, for a total portion of 73.8% of their gross profit going to be spent in SG&A and R&D costs. For the most part, they maintain that number consistently for the next 2 years, as we see in 2019 that number decreased to 71.5% before increasing slightly to 71.8% in 2020. When we compare that to Corsair, though, we do see some startling numbers. In 2018, the SG&A cost of Corsair accumulated 72% of their gross profit, with the R&D cost making up another 16.6%, meaning 88.6% of their gross profit was taken away essentially and eaten up directly by SG&A and R&D costs. The following year in 2019, the situation basically stays the same, with the total coming out to 88.7%. However, last year in 2020, we see an interesting decrease, with SG&A and R&D costs only totaling 65.9%. To me, this means potentially that Corsair may now have a new advantage over competitors, but only if they can maintain this reduction in cost. Evidently, though, Corsair does have a strong business model and the ability to monetize it, so now let's turn to institutional ownership to see how does smart money feel about it. According to Yahoo Finance, the top 5 holders are BlackRock at about 3%, Vanguard at just over 2%, Sequana under 1%, Geode under 1%, and State Street under 1%, with total institutional ownership coming up to over 70%. I'm not sure how the top holder would only have 3% with this high institutional ownership. I would have to look more into the details, but FinViz, Yahoo Finance, and Holdings Channel all reported very similar numbers. Next up, though, let's just do a little SWOT analysis to take a look at the strengths, weaknesses, opportunities, and threats that potential investors into Corsair may face. Starting with strengths, they have leading performance and integration with their products, they have strong revenue growth and consistent gross margins, and they have strong brand name recognition across their product lines. In the way of weaknesses, we talked about it, but they have high SG&A costs, and they do expect increased R&D costs. In the way of opportunities, they'll just continue to expand their product lines between gaming, esports, and streaming, and then with threats, they face the very real idea of competition, inflation, and the reopening of the economy may cause revenue actually to falter back a bit. So let's wrap things up here, come to a conclusion with my take and my position. My position, guys, is I have added it to my watch list, but I don't currently have it in my portfolio yet. Corsair may present potential investors with the opportunity to enter a burgeoning gaming market. On the one hand, they do have revenues that have doubled since about 2018, and they feature an impressive product catalog. On the other hand, though, you do have a company that perhaps has been a little bit loose with some of the SG&A costs we covered, and that might actually hamper their ability to grow into the future, and they may lose some market share as a result. Overall, though, I would say that Corsair makes for an intriguing foray, and I will be looking to open my own position through selling cash secured puts at a lower strike price, though I want to see the SG&A costs remain lower than competitors if I am here to stay long term. But just as one final reminder, guys, I am an individual investor. I am not a financial advisor. This should not be considered financial advice. My name is Dave, and this has been The Market.